Trump is adding a lot of volatility to these markets. Friday's close was crazy. Let's talk about the price action. Roll the intro. Traders, guys, what's going on? Welcome back to another Sunday market breakdown. It's your boy Cleveland. Hope you guys had an awesome weekend and had a good week last week trading. Last week, we wanted to see some dollar strength. Okay, the way the market was positioned, we thought that we would see a little bit of an up move. Okay, here's a real quick screenshot here of the dollar index. And we did. Okay, up until Friday, where Trump wanted to mention that he wanted to add an additional $100 billion of tariffs to China. Okay, that would surmount to $150 billion. So we're not in trade war yet. You know, that's what the administration is trying to say. Hey, this is not a trade war. This is all just, you know, again, what, negotiation or, you know, whatever you want to call it. But no laws have been enacted as of yet. All right. So until that happens, the market is just a little bit freaked out. They're trying to price in the potential eventuality of tariffs, but there is yet to be anything solidified. OK, so that's something that we're going to keep an eye on, and we will be talking about on our high impact series. OK, the fundamental video segment that we crank out on. So make sure you guys are always subscribed if you're new. What's up? And if you like the video for your boy. I appreciate it. Okay, so again, here's a quick look of the dollar index on the weekly. You guys can see here, I'm gonna switch to the daily. You guys can see on the daily, we had quite the up move, okay? But then eventually on Friday, massive sell side, okay? Literally all the way up until the close, the dollar just sold off again. Again, mostly because of all the different fears that would happen if you are in an economy talking about trade. Right. So if we look at the export business in the United States, a vast majority of the agricultural exports are exported over to China. OK, and a lot of China imports agriculturally are happening via the United States. All right. So again, they are a massive trade partner. Our biggest trade partners are Canada and Mexico. But next to those two, China is still definitely in the top 5. They have a massive economy and they have a lot of need for consumption. And so we do a lot of business with them. OK, so that has given the administration an idea that, hey, look, you know, the Chinese policy in terms of, you know, printing money that has been happening. I mean, you got to think China, you know, 30 years ago was a poverty stricken nation. 84 out of 100 people in China 30 years ago were in poverty. That's 100 out of 4. 4 out of 100 now are not in poverty. All right, so I'm going to show you guys the statistics on that, but it's amazing. They've had a very, very fast growth, 6.4 GDP year over year. Okay, US comes in at 2.8, 2.9. Okay, so again, massive developments happening on that end, and that deals a lot with what they have done with their currency. They throw a lot of cash back over into themselves. All right, they print a lot of money, lowering the cost, okay, for Chinese goods, really ramping up the export business for them. All right, so again, Trump doesn't like that, and he's trying to fight at that a little bit. A lot of politics. That's a bipartisan, you know, agreement in a sense. Okay, a lot of people on the Democratic side don't like that fact, and obviously many of the Republicans don't like that fact as well. So we're gonna have to see what happens there. Okay, but when it refers back over to these markets, we can see a sell-off in the S&P. Okay, the before and after of Trump speaking is prevalent. All right, and so you have a lot of market participants that hate the fact that our administration and our president is throwing these markets all over the place. So eventually, you know, again, this wasn't happening with Gary Cohen, right? Gary Cohen, head of the Economic Council in the U.S., really was the gatekeeper as to Trump, you know, saying any shit about trade, anything about export business, anything about the economy at all. He's a boss. He really know what he was talking about. Now there's 2 or 3 guys, you know, having to say, hey, you know, don't listen to what Trump just said. You know, he's trying to be, I don't know, presidential, or he's trying to do the best he can with, you know, having a strong hand and making sure America's first, you know, but again, we are still negotiating with China at this point. China's saying, hey, we're not negotiating anything. You guys haven't even talked to us. There's a lot going on. So all this turbulence that's happening in the administration, all the jawboning, we're seeing affected that on our markets, and that is making opportunities for trading, but at the same time, you can't keep with the same precipice that you know, once would have, right? So if we thought last week, again, we thought we would see dollar strength, and it happened, you know, from a technical perspective, and even from an economic data perspective, we thought we could get a break up into the 91s on the dollar index, and then eventually, who knows, maybe even the 92s. That would send us to $1.20 on the euro. Okay, Euro real slow at the moment. We thought that we could see a little bit of strength come back on the dollar side, as you know, most of the things that are happening with the dollar and a lot of different craziness that was going on in Q1 has somewhat calmed down a bit. Maybe we'll see a little bit more participation back in. We have not seen that. Okay, we have not seen it. It eluded for a second, but then again, with the crazy turbulence of what's happening economically, you can't really find an edge in a long directional move. All right, you're gonna have to play with, you know, the ebb and flow of how these markets are operating right now, right? So if you're looking for maybe a little pullback play from the dollar strength, you know, later on in the week, you know, Thursday or Friday, you definitely got it. All right, you definitely got it. If you were looking long dollar, Monday, Tuesday, Wednesday, you got that too. So it was really all about managing the money around all that nonsense. Okay, lots of volatility in. Now, can we see pullbacks? Right now, that's what I'm looking for. Okay, so if you take a picture here of the euro pulled back all the way up into structure, I think around the 61.8% fib. Maybe we get a correction back down and a retest of those lows. We need to break this low here. I think that's around $21 highs. We're still in $22s, and we need to break that low. Okay, if we still think that this dollar is going to come in, we potentially just got a nice pullback entry, right? We could potentially have seen the market break lower. We don't have to take a breakout of the low, which is something we were contemplating last week. It gives you a bad entry. It gets you in the market, but it gives you a bad entry. You want to take those pullbacks. So now hopefully we can go short this Euro U if dollar strength preludes. Okay, so let's keep an eye on that. We'll talk about it more when we look over here in these markets. Okay, we'll talk a little bit more about the fundamental pictures and all that stuff as well tomorrow on High Impact. Okay, so guys, I'm gonna pull over to the charts real quick. Guys, make sure you are subscribed. Okay, and again, if you enjoyed the content, like the video for your boys, like this little thumbs up button right below if you didn't, you never seen it. And let's pull over to the charts. Okay. All right, guys, let's take a look at these charts real quick. Euro USD tied up here at these highs like it has been since February. That's something we just mentioned on our webinar. Again, just seeing the markets tied up here. It's very interesting, right? The dollar hasn't really moved anywhere. Here's the dollar index, same thing, right? I mean, it looks the exact same, inversely correlated, as we all know. All right, so if we pull up just a nice little structural low, we're still in that zone. Okay, we're still in that zone. I do want to see dollar strength. I do. I think a lot has been real. I think the dollar's been hit pretty hard. This consolidation kind of tells me that all the sellers that were willing to sell for all the bullshit that's been going down, whether it's Trump, whether it's the administration, whether it's Steven Mnuchin talking about he wants a weaker dollar, just weaker dollar talks. I think all that was priced in 2017. We saw another run of that in 2018, of course, coupled with a lot of massive strength coming in on the S&P 500, which drove the dollar down even lower. Again, geez, what else could happen at this point? So maybe we see a push higher up into that structure. Obviously, counterparty risk, folks, could have this market lower. Okay, if the euro wants to get stronger, then we will see this dollar sell the hell off. And then basically you'll just be playing within the range here, right? You'll be looking to buy at this low, sell somewhere within this horribly structured candlestick high. Okay, so that's really what we're looking for. Again, you guys know my idea. Would love to see markets short. If you guys are in the community, you'll see when those trades are called out there. If not, you might want to join on in, and we'll see what we get. But other than that, that's really where we are. I'll draw up some fibs real quick to see where we are structurally. Let's see here. So here is our low, back up into the high, not even at the 23.6. That is a level that we've wanted markets at for 4 or 5 weeks. Sorry, 7 or 8 weeks. Okay, pulling that off there. Let's go to the next fib. Where are we at? Boom. So we're sitting right there, right around the 23.6. Okay, again, very, very fast moving market there. We need markets to run down to the 50. Pretty feasible, folks. Pretty feasible. Look, could we go higher? Yes. Could we go lower? Yes. What would make us go higher, though, rather than lower? I think it's more likely we sell off before we push back up into structure. That's my bet. Let's see what happens. Aussie USD long is counterintuitive to our US strength play. Okay, so this is more or less the contingency. We have CPI and PPI coming out. PPI coming out on Tuesday. CPI coming out on Wednesday, 8:30. Okay, if we get some negative data, folks, this will be a great time to start looking long for the Aussie U. Okay, Aussie U, if I pull out a bit, monthly perspective, here you go. Charts aren't clean. I have some stuff already going here. Let's just roll with it, guys. All right, let's take that fib off. This is our monthly. Okay, monthly. Nice little trend line happening. All right, I like that. But what's even better, folks, rather than, just some random trend line, dynamic support and resistance. That's what a trend line is, a sloping support and resistance. Same rules apply to trend lines as they do to regular support and resistance. But What I like even more, folks, is straight up support and resistance at a given price level. You get a little bit more of an accurate reading as to where you will see risk come in on the market. Remember, when markets reach a certain level, there is risk associated with that level. There's a risk of selling associated with this area because of all the what? All the structure in the area, okay? We talk about that a lot as to why we see markets turn around when they reach to new areas. And if you can rationalize that process, you'll be able to dictate, well, where markets can stop and start, because that is the business of trading. If you thought that markets would stop at this high and you went short, then you did a good job. If you thought that markets would stop at this low and you went long, hey, if you can rationalize key levels in general, momentum, volatility, those are the aspects there, and that's really about it, to be honest, that define where this market rolls. You could do a pretty good job. Okay, obviously, now your job is to really just rationalize why the market stops and starts. Okay, are you coming from a fundamental perspective? Are you coming from a technical perspective? A little bit of both. You guys know what we like to do here. Let's see what we get. Okay, so we'd love to see markets run back up into that structure. This would be the opposite of dollar strength. So if we get the dollar strength, then hey, you're going to see markets kind of tied up again, and you're going to get a CTL, counter trend line break. Okay, which you may be able to go short on that. But again, from a technical perspective, markets at the 38.2 from the fib, heavily retraced from this move here up into structure. Okay, very large retracement. Again, a little relief back up into these levels. Seems feasible, but we won't get it unless that US dollar sells off a bit. So that's the contingency play, really. Same thing here for the pound. Would love to see pound short. Okay, pound short was something that we wanted to play last week. Here's our pound on a weekly scale. Okay, you see markets have tied up since the dollar has been tied up. The pound hasn't moved much relative to the dollar, which means the pound has been somewhat stiff because the dollar has been stiff. So if we see the pound hasn't moved too, then we know the market's just kind of stagnant at the moment, right? So ever since they pushed back the Brexit ruling from Q2 2019 to 2020, so a massive price move there from the 39s all the way up into the 42s. You can see that happen on the daily. Weekly couldn't define it well. Here it is on the daily. Break from this structure, back up into that level. There you go. Not too shabby. For us to see a sell side move, first things first, guys, we got to break $1.40 flat. If we don't break $1.40 flat, we're kind of just continue to range around and hang out. A break at $1.40 flat could definitely lead us down to the low of this consolidation. That's really what I want to see. Okay, we already have the structure up here. Here you go. Okay, let's see what happens on that end. Last thing I really wanted to take a look at real quick before I headed over to the AUDCHF was the USDCAD. USDCAD, from a structural perspective, is in a very binding situation, right? Where could this CAD go? All right, we've already retraced 38.2% from that massive extension to the upside. CAD pulling back a 60%, 61.8% of this entire extension down. Okay, if you guys don't know what I mean, all I just said was, boom, a 61.8% retracement here, right? Massive pullback. CAD moved way too fast, 2017. Massive pullback. Could this market continue to sell off here, or are we going to now consolidate in this area? If we're going to consolidate in this area, that plays nice with what? The US dollar strength play. Are we going to test the 38.2 and then run higher? 38.2 is a very feasible place to see markets, continue to the upside. We just need a rally. We need a strength play, okay? Could we see a little bit of U.S. weakness to where we see markets hit off on the 50 and then by Wednesday we get that run higher? That would be awesome, okay? That would be awesome. Let's see what we get, folks. Last but not least here is this Aussie CHF. Aussie CHF was a quick little grab and go for a couple of folks in the community last week because we were looking long Aussie CHF because, again, Australia's been hit pretty hard. We're looking long Aussie CHF around this price area there. On the Wednesday, Thursday, we had a nice little price move up into structure. Price discovery allowed us to trade back up into this base of this entire consolidation, aka the low, whatever you want to call it. And then we saw market subsequently after that fall over quite a bit, retest, and where are we at now? Retesting. Okay, so 0.10, 0.09 on the day. Could we get a run up into the level? I think so. This is what we're looking like on the daily. As you guys can see, there's a wide range here of profit potential. All right, can we get a retracement here? All right, CHF has been hit very hard, and you're not seeing that reflected well here on the CHF because, again, Aussie has been hit pretty hard as well. But if we look over on the GBP or on the Euro CHF, go ahead, do your due diligence, check that out. You'll see that CHF has been, again, hit quite hard back in February, back in March. That market's pulled back a bit. So maybe we get a push back up into structure here on the Aussie CHF long. That's something also that we'd be looking for, okay? So, folks, that's pretty much it. Would love to see the dollar long, okay? We have inflation readings coming out. We'll talk about it tomorrow on High Impact. If we get a positive reading there, we'll see this dollar, kill it, all right? It'll kill it. Maybe that activates our US dollar long sell-off on the Euro-U. If we don't get it, then, hey, maybe we can play that over there on the Aussie. We have some opportunity everywhere, though, okay? CAD is also looking pretty good. Maybe a test of the 50% level in that CAD will really extend that market for us so we can get a nice price, all right? So, guys, look, got any questions, throw them down in the comment below, all right? Real easy. If you guys want to trade with us, head over to the link in the bio, and you can follow up with us there. And other than that, folks, let's see what we get this week. See you guys tomorrow, High Impact. Talk to you guys real soon. Watch that overnight. We'll see what we got in the morning. Talk soon.